Good afternoon and welcome to the International Family Business Day webinar from Family Business United. I am delighted to have created a day really for us all around the world to come together and celebrate the joy that family businesses bring to communities across the world. We've got a fantastic panel with us today from literally all corners of the globe. So I'm going to start really by getting them just briefly to introduce themselves and then we'll start. During the session, if you've got any questions at all, please post them to the chat room and we'll endeavour to cover as many as we can during the session. But obviously it's a day of celebration in terms of the contribution that family firms make around the world in terms of jobs they create, wealth they provide, and all the philanthropic force for good things that family businesses have done and continue to do on a daily basis. So let me just start by introducing the panel, welcoming you to International Family Business Day. And Sonu, if I can ask you just to do a brief introduction. You're on mute, Sonu.
Yeah, the bane of Zoom. Hi, I am Sonu Bhasin, and I'm joining from Delhi, India. I now work in the area of family businesses after having spent almost 30 years in the corporate world. I work as a consultant, and a lot of my work is done through my writing. I write books, I write for newspapers, and I bring out a magazine called Families and Business. And for me, working with family businesses is a passion because I do believe that they are the unsung heroes of any economy that they're present in.
Thanks, Sonu. And we'll come back and pick up on some of those things that you've mentioned there in a while. Steve, over to you.
Good morning from Canada. And yes, if you've heard coming to Canada in January is a cold experience, that is correct. It is minus 22 Celsius this morning when I got up. I am a family business coach, consultant, facilitator, all those things. I grew up in a family business. We had a liquidity event. I managed our family office for a couple of decades, and then I discovered this work and finally found my calling. And now all I do is work with family businesses, talk about family businesses, and write about family businesses in my weekly blog and in other places. And I'm so glad to join a bunch of friends, old and a couple of new ones here today. And next.
Brilliant. Thanks, Steve. Russ, over to you.
Hi, I'm Russ Hayworth. I'm a family business advisor based in the UK. I'm also the host of a podcast called the Family Business Podcast. Alongside the work I'm doing with families, I'm also the co-director of a project called the Quest for Legitimacy, which is a research project looking at the impact of growing up around significance. So quite a varied amount of work involved in all those different projects, and looking forward to a good discussion today.
Thanks, Russ. Mari?
Hi, I'm Mary Mickle. I'm just due north of Paul and Russ on the same time zone in Scotland. I, like Steve, am a coach, consultant, facilitator, we wear many hats, working as an advisor in the intergenerational space for multi-generational family businesses in UK and Europe. I was on the main board of my own family business for 10 years, which will be 100 in 3 years' time. So I think we're on the last straight there. I'm still an active owner of that business. I'm on faculty for the FFI out of Boston, and I sit as a non-exec on a second-gen family business in Colorado.
Just showing that boundaries are no existence. Josh, over to you in Boston.
Great. So great to be with you all. As Paul said, I live in the Boston, Massachusetts area. I'm the co-founder and a partner at a firm called Banyan Global that works with family businesses all around the world on governance and defining success, next generation, succession planning, all that kind of good stuff. I also teach in the MBA program at Columbia Business School and do a lot of writing about family businesses, mostly for Harvard Business Review. And I'm delighted to be here. Dedicated this stage of my career to family businesses, and just believe that although when things go wrong, they go really wrong, family businesses are the best form of capitalism that we've got. So great to be celebrating them.
Thanks, Josh. Nikkei, can I come to you?
You may. My name is Nikkei Anani. I'm based in Austin, Texas. Like a number of colleagues here, I'm engrossed in this space of family business, primarily serving African families on intergenerational wealth and intergenerational businesses. I'm also co-founder of African Family Firms. We're a nonprofit community of business owners across the continent. I'm also a podcast host of The Connected Generation, which explores all things legacy wealth and legacy business.
Thanks, Nikki. And Julian, last but not least.
Good morning, good afternoon, good afternoon. For me, I'm French. My name is Julian Lesque. I am the co-founder of Kimpa, which is a family office dedicated to impact investing. I am specialized in family governance, and I am the author of a thesis that has been studying how the environmental crisis affects the psychodynamic between family members and within family business, using genograms and drawings to challenge the way the family see the business. I'm very happy to be with you guys, and looking forward to this great afternoon with you.
Thanks, Julian. Let's get the question started then. My first question, really, I'm going to come to Josh, you first, but we talk about family firms being the backbone of economies around the world. Why do you think they're so important?
Yeah, well, I think it's important to think whenever we think about a certain way of owning a company, whether it's a family or a government or the public, it's designed to solve a certain problem, and certain types of ownership are better at solving certain problems. And family businesses were around for a long time. They have been the backbone of the economy for centuries. That was sort of like one of the first modes of ownership, and it really helped to kind of keep businesses going, to pass skills down from generation to the next, all that kind of stuff. And then I think we sort of see a bit of a divergence in the economy over the last 50, 100 years. In developing economies, I'm not sure that answer ever changed. I think the family businesses continue to be a really critical way of developing networks, of passing capital from one generation to the next. What we saw in the developed economies, especially in the 20th century, was a push towards scale. That it really became important to build businesses that were able to cover huge economies, global economies. You look at a company like Ford Motor Company. Not only did they have to build the cars, but they actually used to graze sheep for the seat covers. So they had to cover everything related to a business. And scale is actually, especially getting very big, very fast, is not something that family businesses are as good at. And in fact, that's why public companies started to come to prominence, is because they're really effective at solving the problem of getting access to lots of capital, other people's money, debt and equity, in order to build these extraordinarily large businesses. And so in many countries, the US included, the UK is another example of that, family businesses sort of went a bit off of the radar. They weren't as able to solve that problem. And I think what we're seeing now is actually, again, kind of a sea change in the way that business is happening. And the things that family businesses are not so good at of scaling has become less critical, because you can pick and choose, you can choose your spot, you can leverage all kinds of resources. Money's never been more accessible than it is now. But also the things that family businesses are really good at, things like attracting talent, of having a long-term view of investment, of being able to make fast decisions and be responsive, of paying attention to more than the bottom line and being about much more than just shareholder return. All these things are actually coming around. These are the things that we talk about in business schools as being the sources of long-term success. So I think in some ways, for many economies around the world, family businesses never really left. They were dominant. They are dominant. They still will be dominant. But for the most, I think, developed economies, that's where family businesses kind of became a way station on the path to becoming a real company, which was a public company. And I think we see those trends shifting the other direction. And I really honestly believe that, in most sectors, probably other than technology, where it's a race to, who can be the only sole winner, in most parts of the economy, the things that family businesses are good at are actually the things that are going to determine economic success for decades to come.
Okay, Josh, some good points in there. Nikki, would you agree with that?
Yes, I would agree with that. And I think I'll just add that in addition to the points that Josh made, is why they're so important is at this juncture where we're at in our world, we're seeing so many social issues and so many disruptive business issues that require longer term thinking than historically we've ever had to face. We're seeing higher rates of technological disruption than ever before. And so families tend to think in generations, businesses, non-family firms tend to think in quarters. governments tend to think in election cycles. And so we have this interesting institution, family businesses, that are able to think about generating long-term economic value beyond just quarters, beyond just election cycles, filling a need where other institutions are really neglecting. Beyond just their time horizon, also the scope in which families tend to think. They tend to think wider as well, really not just focused on shareholder capital, like your non-family firms, but also really thinking through stakeholder capital, thinking through how their activities will impact, suppliers, impacts the local community, impacts their employees. And we are seeing a rise of this yearning for stakeholder capitalism in our world, conscious capitalism being pushed by not just the rising generation, but there's a rise of consciousness in our societies to really think, to see this confluence of profit and purpose. So I think right now at this we're in a very unique moment in our history where family businesses are being pushed to the forefront. But as Josh kind of alluded to, there's certain things that families are not as, historically have not been as strong at doing. But I think we have an opportunity to address those.
Okay, and Sonu, coming to you from an Indian perspective, do you see the same thing from the historical development of family firms in India?
Yeah, so I've just heard the point of view from the developed economies. India is still a developing economy, and if I speak from the perspective of a developing economy and India, family businesses have always been important. And even when we were not independent, it were the family businesses that were providing most employment. They were contributing to the economy. It was between our independence and the early 90s, there was a time when the entrepreneurship was actually shackled because the government had a very socialistic bent of mind, and business was licensed, and therefore the entire power of small businesses, large businesses, entrepreneurship were not allowed to develop. But since early 90s of last century, India has just seen an explosion of entrepreneurship. These are family businesses. There are 55 million of them and growing every day. They are actually the growth engines of the Indian economy. During the pandemic, when they were the ones that were most hit, the growth of the economy was affected. And now that the focus of the government and the focus of the family businesses, the SMBs, we call them SMEs, small and medium enterprises, the effect on the economy is just fantastic. It's there for the statisticians to see. So, the reason I said that I believe that they are the backbone of any economies that they are present in is because, they are the ones that actually keep not only the economy ticking, but also the large businesses ticking, because they are the OEM providers, they are the vendors, they are the suppliers, they are the logistic suppliers. And if they suddenly cease to exist, even the what we call professional businesses, large businesses, would find it difficult to exist. So any data that we look at, in India, when I look at the stock market, out of the 7,000 companies that are listed, 80% of them are family businesses, and it's only a very small percent of them that are very large. So the small and medium enterprises, family businesses are the ones that keep the economy ticking, and they are actually the future large businesses. I mean, one of the examples that I talk about to people when I speak is that Walmart used to be what we call a corner store, I think not even 80 years ago. So a corner store can become one of the largest retailers. Every small business, therefore, has the potential to grow into a mega business.
That's amazing. And actually listening to some of those statistics, 80% of the Indian stock exchange is family owned, but 55 million family firms in a nation. It is a phenomenal number of family businesses. So it just defines the scale in terms of where we're at. And I guess, Steve, coming to you, in terms of how important a family business is, that's a massive number. But in terms of around the world, family firms have such a big impression, don't they?
I've seen statistics over the years from a number of different countries, and I don't think I've ever seen a number less than 60%. Whether it's, and there's different ways to measure this, of course. So like the number of businesses, so you'll have a lot of mom and pop shops, and I'm sure in that 55 million, there are some of those. But the bigger companies that also come out of this and grow out of these are really phenomenal, and we kind of lose track of which businesses are family businesses, and we think that once a company's gone public, it's no longer a family business. But that's not really true. I think there's probably about a third of the Fortune 500 companies that are still have a majority controlled ownership block that's owned by a family, and the numbers are different in different parts of the world in terms of, like Josh was talking about, developing. There's more still family businesses in the traditional sense, but in the developed world, there are ones that have developed incredibly. And so there's no pocket of the world economy that doesn't have some family business presence. And I like what Josh was saying, and I think he wrote an article about a few years ago about how the 21st century is going to be the century of family business. And when he was talking about, I was thinking about the pendulum coming back, and that things went for scale, but now what family businesses are good at is becoming important again. So I think there's just going to be more of this ahead.
Yeah, I'd agree with you. Josh, can I come to you? And at the same time, can I ask you a question that's coming from the floor, which I was going to come on to, but let's tackle it straight on in terms of the importance of family firms. The question coming in terms of how do we dispel the press media and some of the advisors coming back and saying, you know what, rags to rags in 3 generations, it's a bit of a myth. What can we do to dispel that and actually prove that family firms really are important in all that they do?
Well, I think, and speaking as an advisor, someone, I've been doing this work for about 15 years, and for the first few of those years, I used to cite this as a scare tactic. And so I think one thing we can do is just use every chance we have to stop talking about it as if it's a fact. I mean, all the research we have about longevity of wealth suggests that it's more like 10 to 15 generations than 3 once you're able to achieve a certain level of wealth. It just wealth doesn't dissipate that like that. And then business, there's all the talk about business failures and all the like. All that data is really telling you is that making a business last for 100 years is really hard. I don't think we need research to tell us that. We know that it's really hard to keep businesses going. All the evidence that we have suggests that family businesses are better at longevity than other kinds. So I think we can talk about it a lot. I think part of the challenge is that it is so tempting to turn to family businesses to sell magazines, newspapers, to get TV ratings. The stories are incredible. I mean, when a family business blows up, fictional stories, Succession, Dynasty, Dallas, like all these different shows, and then just the stories in the newspaper. It's incredible the kinds of things that happen in a family business. And so I think I don't think we'll ever get away from that. They're just too compelling of stories. We have to tell the opposite. We have to tell the other ones, the families that are doing amazing things in the world and the economy and their communities. We have to find ways to highlight those things and try to create some more counterbalance. But I would just say anytime anyone ever starts citing the 3-generation rule as some sort of inevitability, I would push back, and I make an effort to try to do that as part of changing the discourse on this topic.
Yeah, I'd agree with you completely. And it's all about celebrating the good stories, isn't it? And actually promoting. If you take
something you do a great job of. You do a really nice job of highlighting all those neat family businesses that we otherwise wouldn't know about, partly because they like to be private. So it's a really important platform that you're creating for that.
Yeah, I wasn't pushing for a plug, but actually, I don't know if you saw the news this week, but Maersk have just come out and actually said they're planning for the generation after this generation. So they're taking on board exactly what Nikki said. They're not planning for tomorrow and the week after. They're planning for the next generation to run that business successfully. So let's focus on some of the positives then. I'm going to come to Mari first, but so what are the key qualities that you think differentiate family firms and give them that extra special quality that helps them succeed?
Coming back to where you just finished, actually, Paul, that idea of many family businesses, all of our clients, including actually my own family business, that question was always asked, am I being a good ancestor? Yeah, so I joined my main board, my family business in 2008, construction, right before we went off a huge fiscal cliff. So for me, it was business boot camp in the boardroom for the first couple of years. And I was being guided by my dad, by my uncle, by my slightly more experienced cousin on, we've been here before, yeah? And these are the steps we're going to take to ensure we adapt and survive. And actually to have those safe hands in the tiller as a young director was fantastic learning for me. So I think that ancestry piece, that transfer of human knowledge, human capital, that's really an incredible component of the success and the positive of family business, that you can pass down what you've learned in a way that it's relevant to be consumed by the next generation and applied to continue to adapt and survive. I think that's a key point for me. Josh talked about conscious capitalism, or maybe it was Nikki, but that idea that family businesses explore both financial and socio-economic impacts. And that's a lot of the work I'm now doing with Next Gen. Huge push now. Okay, making money is a given in many family businesses. We're going to have to be profitable because we've got all these responsibilities to our supply chain, to our customers, to our employees, to our shareholders. But actually, what other good can we do? And that drive for responsible ownership. Family businesses, even as they move from being family run to family owned, they're still called family businesses. So that evolution can happen over whatever, 2-3 generations and then onwards, that they're still being governed by family, but they're still thinking long term, they're still thinking about responsible ownership. It would be unfair if I said it was all positive, you know, that would be, I have to bust the myths too. And one of the things I see as a negative of family business, and I was tweeting earlier about visiting the Tate Gallery in London over the weekend and seeing that the Sackler family, who own Purdue Pharma, and the drug OxyContin has had lots of controversy around it, that they used to sponsor, and their names are all over art centres, universities, and now in the Tate and in the Museum of London, it's shrunk down to just the size of a sign because people are embarrassed. What happened in there, if you've read the book, written by the journalist in the States, is that actually they came a little fiefdom where no one was able to say no to the family CEO. And I think that's one of the downsides of family business and negativity. The dynamics can disrupt the business. And often that ends in litigation, and often that ends in, you know, a tricky situation where someone has to step up and say no. So it's not all positive.
No, but I guess it comes down to structures and governance to make sure that those things can't happen. Once they've happened, you need to do something about it. Ideally, put the steps in place beforehand to try and mitigate that risk.
Absolutely. I mean, the reputational damage is absolutely enormous. That those decisions were made, even if you look at Purdue Pharma as an example, and continue to be made on that sort of level, and the corporate challenge was ignored, is absolutely staggering. So yes, you've got to continue to think, we did something wrong, how can we correct it? And governance can support that, but also thinking about pruning. Who is the right leader? Who are the right owners? How do we want to be regarded by our ancestors in the future? It's a great question to ask around the boardroom.
Yeah, brilliant. And Julian, coming to you, what are the key qualities that you see that differentiate family firms from their non-family counterparts?
Yeah, building on what Mary just said, we often look at for capital. You know, you have the financial capital, of course, but just to share this story I had with one client a few years ago, and we were working on his sustainable investing strategy, and so we talked about KPIs. So I said, what are the financial KPIs you have for the next decade, and what are the non-financial KPI you have? And then he paused and he said, that's a lot of financial. And it was really funny, you know, to have this feedback really straightforward about financial is not, you know, what's that important for the family. And so you have the human capital, as Mary explained just before, and how you're going to professionalize the family members, but also all these people that are close to the family and they're here through the generation. You have also the reputation, having a name and trying to build your first name is also something extremely difficult in a family, and it's part of the capital and the reputation of the family you have to take into consideration. And then of course you have the contribution of the family and the contribution on their territories, the contribution on their peers, on the stakeholder, on their community, on the people, on their workers, and all these things are what makes a family business different and have a lot of quality that maybe corporates don't have. One of the most thing I see, and you don't have it in corporate organization, is why they keep these people, when they are not maybe having the right performance, but they're in the company for 20 years or 25 years, and they remember they were there at the beginning. They remember they were there, in the storm 20 years before. So that's part of the quality of this kind of family, the trust they can build within the system, and then they are different in this area.
Actually, I have to say, you say KPIs in a way that makes them sound really interesting compared to some of the financial KPIs that we have in written. So I take on board the full facets there. Russ, do you have anything you'd like to add there?
Yeah, I mean, just building really on what Murray and Julian said in terms of the sort of longer term generational thinking, I think what that also adds is the ability to create a culture where the behavior supports what the family's values are and what the sort of longer term ambition is. I'm not suggesting that all non-family businesses are evil and just focused on pure quarterly returns, but if there is that focus on much more shorter term, that can often be at the expense of some of the longer term aspirations. But having the ability to behave in a way that helps build that long-term culture, that makes it a great place to work, that makes it something that everybody in the family can be really proud of, I think is something that sets it apart.
Yeah, I'd agree with that completely. A question that's coming from the floor, which links in, I guess, quite nice to what we've just been talking about, is all of you do, in some degree, have a relationship working with family businesses. So your client advisors for your clients. We talk about long-term and family businesses evolving and remaining relevant, but advisors often have a generational link. So the question that's coming is, how do different generations find the right advisor to help them with their journey, so that they're not just engaging with the advisors from the generations before? So part of that question, and also then ask you to answer that in the context of what makes you enjoy what you do. What do you love about working with family firms? I'm going to come to you, Nikki.
Sorry, I lost you.
So,
I had a next gen disturbing me in the background.
Don't worry, your next gen's very welcome to join us. What do you love about working with family firms, and how do you broker that conversation when you're talking to the next gen, so that they feel that you're working with them and there's a different advisory level for maybe their parents' level? So how do they engage with the right advisors at the right time, and why do you love working with family firms?
Okay, great question. I love working with family firms because I've had experience working in corporate. I worked in corporate London for a few years in the City of London. Family firms tend to be very agile, closer to the action, very dynamic, very risk-taking. And it's just a lot more exciting for me as a consultant to be closer to the action. I learned so much from them, being with them by their side and doing so. And in terms of the question on generational advisors, is such a great question. I find that I tend to work with next gens one-on-one 70% of the time. So being their advisor on leadership, navigating family dynamics, thinking through how to plan for the future. Do we need a family office, family foundation, and things like that? And then usually that then leads into facilitating family meetings with the whole family. But I do think this is a great question, in that each generation has distinct needs, distinct perspectives, distinct preferences. And quite often as advisors, we do have our what's what I'm looking for, various lenses through which we see things. And oftentimes our clients may feel we are partial in certain ways. So I do think it's important that as advisors, we're aware of that and aware that certain generations may have an inclination towards us more than others. Because I do tend to attract more next gens and less so the elder gen, in my context, on the African continent, a lot of the founding generation, we have a lot of elder dominance. So you will not necessarily be as inclined towards taking instruction from a younger female consultant. So a lot of the work I have to do is empowering the next generation to be change agents in themselves within the family enterprise, to be able to bring about change. So I do think that we just have to be creative in the way we do our work, given the different dynamics that we're seeing in the market.
Okay, that's good advice there. And Steve, can I come to you? You clearly love what you do, but how would you tackle that generational question?
It's really interesting because I was born in '64, which if you look at the stats for, when the baby boom ended, that's right at the very end. So most of the people who are transitioning out are older than me, and their offspring are younger than me. And so I can be sometimes the bridge in between that. And in fact, when I started doing this work, I really thought that there would be a lot of intergenerational work of helping the parents talk to their offspring, helping coach up the rising gen so that they can better react or interact with their parents and have adult to adult relationships. What I'm finding I'm getting a lot more of now is sibling groups. And so maybe where the work wasn't done so well in the transition from one generation to the next, and now the siblings are realizing that their relationships are, they're stepping on each other's toes and things like that. So, but the question about finding the fit for the advisor for the family, I always say that forget about the geography. Find the people that you can relate to and get along with. I think we've all learned in the last 2 years, you can get a lot done in this format. I have clients now that I've never met except over a Zoom screen. And so take the time to talk to different advisors, find the ones that you can work well with, that you identify with, and don't feel like you need to settle on one advisor for the whole family. Maybe somebody is good to coach the parents and somebody else is good to coach the rising generation. And I'm seeing a lot more of, multidisciplinary groups and people getting together and sharing the work. And it's all often a case of 1 + 1 = 3. If you can find a couple of different advisors to help you, you're actually getting 3 times the bang for your buck.
Yeah, totally agree with you. Russ, have you got anything you'd like to add to that?
Yeah, just a little bit from the research findings from the project I mentioned in the introduction. We spoke to 22 rising generation members from across the globe. And one of the questions that came up quite often was around the type of advice that they were given, predominantly being seen as being talked at rather than talked with by advisors whose perhaps their aim is to ensure that the business is the core success, if you like. So the business pays their fees, therefore it's in their interest to make sure that continues to happen, not through any ill intention, but just through a lack of perhaps the collaborative sense that Steve mentioned there about bringing in other advisors to work across generations. If organizations are able to bring that to the party and say to people, actually, we've got somebody outside of what we do that we know, like, and trust who could potentially work on that basis. It's a much more collaborative relationship between the advisor and the next gen or rising gen as well then, because you're not being talked at by your parents' advisors, particularly if they're then throwing that third generation rule at you in their sales pitch to go, this is why I'm the right person to talk to, because I'm going to help you avoid that happening to you.
Okay, that's good advice as well. And moving on, I guess the one word that we've probably all heard in the last couple of years that's growing in name is sustainability. And in the context of family business, sustainability isn't just about the planet, but saving the planet and creating sustainable family firms is on the agenda for pretty much every business out there today, and the move to net zero. So Julian, what do you see as what are the important factors for you in creating sustainable family firms?
Okay, so thank you for the question. It's a really large subject today. You're right, and we're just at the beginning. Just to start, when I did my thesis about sustainability, I asked the participant to draw their family business, and I asked them to draw the family business today and the family business in 20 years time from now. And interestingly, whoever the family I interviewed, I got the same answers. The first drawing were always quite negative. They were representing probably the last decades or 20 years before. And for example, I had this family, they drew a big factory with a huge black smoke on top of it. And there were no factory in this family business. Just to give you how they were projecting their business connecting to sustainability. And the second drawing was super green, super digital, super international. So almost not in line with the reality. And then I asked them to take these two drawings and put them back in their genogram. We've done this work on the genogram, so this family tree where you draw the emotional link between the family members. And now they had this new member, which was the family business. And so basically the first drawing, so the family business today became an old man, and the second drawing became systematically a young lady. With a relationship stronger with the second drawing compared to the first drawing, meaning that depending whoever the generation you're in today, this topic is on your agenda and it has a strong emotional impact. And the impact is very different and it's moving before compared to yesterday. All these family businesses, they've been always implicate in a sort of giving back. So they had this philanthropy activities from decades, from centuries for some of them. But today this is changing because it affects the business. So the sustainability and social and environmental impact, it impacts the family and the family shareholders on how they're going to diversify their asset allocation. It impacts the philanthropy, and it impacts as well the business, because the business now has to move into this kind of problematic. And to give you a last example, I have this client, they own, I think, 350 gas stations in France. So now imagine you're in the next generation. The future is being an owner of a gas station. Very hard to attract this next generation to the business, okay, as you can imagine. So you need to, because the question was about the factors, you need to put knowledge on the table. You need to develop new skills. You need to be able not to try only to paint the wall in green, but to really go deeper into what is your business, what is it going to become tomorrow, what is the gas station in 30 years from now, okay? The second thing is revisit your values, your mission, your vision, because it has to be revisited today according to this. And the last thing is, once you've done that, you need to have an impact investment thesis on each cycle for the family, for the shareholders, and for the business. And that's the only way you can integrate the next generation into the family business for tomorrow.
So take an honest look at what you are and where you want to go, I guess is what you're saying, and focus on the future, but put the right knowledge in place to make the next gen want to get involved with that business. Josh, anything you'd add in terms of sustainability going forward for a family business? What do you see as good pillars to help create sustainable firms?
Well, just to build on what Julian said, I think family businesses have always been, not all, again, we'll come back to that I think later, whether there's some bad actors too, but they are values based. And I think this is, oftentimes those values have been about employees and but taking care of people and the community. And so I think what we're partly the topic of sustainability becomes about redefining what the values are of importance to the family, and taking the time to really have those conversations and to talk about it as sustainability, yes, as a moral imperative, but also as a strategic imperative, as something that is critical to the long-term success of the business and therefore of the family's success. And the nice thing about that is once you get yourself into the right mode of saying this is something that we value and it has strategic value, then a lot of the trade-offs that we tend to think of between sustainable decision-making and long-term, performance start to evaporate. The trade-offs are primarily short-term in nature. It's if you're cutting corners or you need to hit your quarterly earnings target, that's when you start to make decisions that are really forcing a trade-off between making money and doing the right thing. More often than not, you can do both at the same time. So one of the families I work with is a heavy manufacturing business. Carbon is just part. They're part of the backbone of the economy. If they have to in some ways create carbon, but they think about this as sustainability is critical to not just keeping the owners in the game, but keeping their business sustainable. And they've just invested a huge amount of money in modernizing all their facilities. Did they do that because it will improve their bottom line? Yes. Did they do that because it will drastically cut emissions from all their factories? Yes, right? And the only trade-off was that this is a 5 to 10 year payoff as opposed to a 1 to 2 year payoff. Once you get yourself in the mode of thinking that these are our values, these are the strategic imperatives for our business to survive, for, as Julian said, for the owners to want to be involved in this business for the long term, it opens up a whole range of possible avenues of accomplishing multiple goals at the same time.
Fantastic. And Mari, coming to you, it kind of links really neatly into the next question, really, and Josh has probably answered it in a way for you, but I'm sure you've got a take on it. Purpose and values we talk about a lot, but so are purpose and values really critical to that long-term sustainability for a family firm?
I think building a bit on what Josh said and answering your question, that trade-off piece, if you're going to have a business that is owned by a large group, even going through the generations, so a larger group than those that originally established it, you have to educate them on what the purpose of the business is. And actually, I'm working with a client at the moment who are going through ownership transition, a European client, who have created a sort of sustainable document that talks very much to the 17 UN sustainability goals, but they sit it in business priorities and family priorities. And what they've done is they've educated themselves on the true cost, which is Josh's conversation on trade-offs. So they actually fully now understand the cost of what they are asking for, not just for the business strategy, and they've had to learn how to be comfortable with influencing business strategy and finding their voice, but also actually, we can't ask for dividend to be maximized at the same time as asking for the business to invest in 5 to 10 year payoff on becoming more sustainable. So we've seen businesses in the past where that was not understood. So I think that actually as more conversation is around what the purpose of this business, and the next generation are naturally more attuned to the needs of the people on the planet, that sustainability is getting plugged right in at purpose level. And then really underneath that, you've got to work out, well, how will the business deliver that? If the purpose of the business is defined, and why do we want it? Why do we want it together? What's it for? What do we want for it? What do we want from it? How is that then plugged into the strategy and delivered? I think that's the bit that people are now understanding more as well, rather than just being a sort of holy grail that sits on a wall, vision and values and purpose, and no one really knows who made it up and why it's there in reception. Actually, I think those things are now joining up much better. The values are showing up. People are actually talking about what behaviors exemplify and contradict a value. And they're starting to think more about how the strategy of the business can incorporate what's important to the family that own it, the purpose, and how those can be measured, as Julian said, with KPIs.
Yeah.
And so it's quite a convoluted answer, sorry, but I just think that the coherency around that whole piece on purpose, mission, vision, values, and sustainability we're starting to see that come together now.
It's as you say, it's a complex question, isn't it? Because there's sustainability, there's the planet sustainability, but there's sustainability in the context of a family business, which is a very different thing. And families have been doing the long-term thinking for a long time. So, and very much at the fore in some of the environmental stuff too. So I think it is complex. There's no quick fix. And I think it goes back to, you've just all moved on my screen, but what Julian was saying in terms of the right people to give the right piece of advice and actually bring the whole thing together. Sony, you had your hand raised. Can I come to you?
Yeah, I just wanted to maybe add something about what Mari just said, sharing an example of what a client did recently, trying to align on the sustainability topic, the 3 cycle. What they did is that they created an impact investing fund, but with 3 shareholders. The first shareholder was the family holding, The second shareholder was the family business. And the third shareholder was the family foundation. And the alignment is great because what we're trying to do with these guys is to say, okay, it's an impact investing fund. So it's a long-term strategy. We're going to invest into impact funds or in direct deals. But the bet is that we need cash to do that. But also the business needs to innovate. So there is this mandate research that has been given to our team to look for both companies that have innovation that can contribute to change and develop the business, also for the diversification of the asset. But at the same time, the bet is that in 7 or 8 years' time from now, when this fund is going to make profits, a big share of these profits will go to the foundation. And it's a new way to align the whole family values and the family vision, and also it helps to integrate those family members that are not into the business, and that's one of the ideas we have at that time.
A great way to approach the topic, isn't it? I guess the challenge you've always got is what hats are those family members holding? Are they on the foundation? Are they part of the board? Are they part of the business, or just the family? So it's integrating all of those different hats, and you may have people wearing more than one hat. So it's a complex scenario that just takes a lot of time and effort to understand in order to absorb and find the right way forward. You hit on the word there, Julian, in terms of, you mentioned innovation. So I'm going to come to you, Russ, in terms of, do you think family firms really are pioneers and innovators, or are they followers? Where do you see the family business field?
I think they can be. Again, I don't think there's a hard and fast rule around the fact that if you are a family business, you're naturally innovative. I think in terms of as well, you need to look at which generation of the business you're looking at, because a founder is perhaps by essence very entrepreneurial and able to innovate, and that same skill set may not exist in the third, fourth, fifth generation. So making sure that there are appropriate roles for everybody within the family that suit what the family are trying to achieve, back to that vision and purpose element to it. I think as well, there is often a perception that family businesses are risk averse and kind of rest on their laurels a little bit. And what I'm seeing in the work I'm doing is that's not the case. They are particularly driven by what's happening with the pandemic, is they're having to look at ways in which to adapt, to innovate, to change the way in which they operate. And having the nimbleness and ability to be able to do so is serving them very well. Again, not a hard and fast rule, because I know of others that have really struggled as a result of that, and perhaps they haven't got the correct decision-making forums and governance in place to support that. But I think in essence that the characteristics of family firms being sort of pigeonholed into a risk-averse, slow-moving kind of organization isn't what I'm seeing in terms of the client work that I'm doing at the moment.
Yeah, that's good to hear. And Steve, would you agree with that? Do you think family firms are pioneering in their approach?
Well, I like the way Russ said, it's not, because you're a family firm, you will be innovative, but they certainly have the potential. And I think it was Mary before who said something about they're more nimble and they're more they can move more quickly. And so family firms that have already started to transition and bring in younger, more forward-thinking people who have many decades ahead that they're looking towards, they have the time in their arc of life to plan for these major innovations, because they're not looking for the next quarter. And they're not looking for, well, the last 10 years of this business as I wind myself out and my offspring come and take over. So because they are able to look further ahead, because they're not driven by that next quarterly profit statement, they certainly have the potential to do it. And there are plenty of examples of where they are doing it. And so I think what some firms need is a model to follow. And so I would love it if we would talk more about the family firms that are doing a good job of it, because then when we talk to other families that aren't necessarily doing it, it's easier to say, well, you know what this other family did, look what they did. And then you sort of plant some seeds, and then people realize what's possible. And then hopefully you can do even more of that.
Yeah, and I guess that goes back to what Josh said earlier in terms of the rags to rags in 3 generations. Actually, forget the negativity and focus on the good stories, the good examples, and share those where we can, without breaching client confidentiality, but actually sharing best practice to help others embrace and develop too. I guess the other thing I'd throw in is the past couple of years have been really tough in terms of doing normal business. So businesses have had to be innovative across the board, and we've seen some great examples of family firms that have done things differently. So I want to come to you now. I mean, I've seen some of the news today in terms of India and kids are being allowed to go back to school. So the pandemic's had a massive impact across the world, but resilience in family firms in India, and how have they responded? And is there a more positive outlook on the horizon now?
Yeah, so we are, I think, 2 years down into the pandemic. And when you ask how did the family businesses react to the pandemic, I think the short answer is with great shock, because it was completely out of the blue and nobody expected it. And today meetings like these, Zoom meetings and virtual meetings have become the norm. But if you look back in 2020, March of 2020, it was still a struggle. But the good thing is, and this is from I'm talking about India, the families decided to huddle together, and whichever part of the world that the extended family members were in, they tried to come back, and they stayed together. So joint family system, or multi-generational living together, is quite the norm in India. It's not abnormal. But in the pandemic, and especially because we had a very strict lockdown for the first 3 or 4 months, the families typically just got together in one large house and they spent time together. And my conversations with various family members during that time has led me to see this very interesting phenomena, that the family members actually were able to unclog a lot of the communication pipelines because of the sheer amount of time that they were forced to spend together. There is that much of screen time that you can do in a day, and fathers and sons and brothers, and they were able to they were forced, if I can use that word, to speak with each other because they were all thrown together. And as a result, a lot of the issues around succession, I would say, will be sorted out, have been sorted out. The biggest advantage has been that the patriarchs have stopped believing that they are immortal, that they are never going to die. They've looked at death, straight in the face. And therefore, the ability or the willingness of the patriarch to let go is not going to be as much of a challenge as it was before 2020. So also with all the family members coming together, and also the family taking care of the employees, data shows, and it is empirical data, and that the businesses are coming back quickly and faster. A lot of the issues around caring for employees, sacking of employees, the family businesses, let me put it this way, have been far kinder to the employees than the non-family businesses. They've been more open to doing things that they would have never thought of before March 2020. So the family businesses are resilient. India is seeing them quickly springing back into action, and all data shows that they are going to be back on track. And most importantly, the family members will have a better communication with each other, which is, or the lack of the communication is, the starting point of all conflict.
Conversation's the starting point for everything, isn't it, to be fair, when it comes to family business owners. So it's great to hear them coming back. Steve, do you see a similar picture from Canada?
Yeah, I like what Sona just said about how the family businesses have been kinder. And one of the other things that happened when the pandemic hit was family businesses found out how strong their governance was. So the examples are like, if a family already had some governance together and now they're stuck having to make some decisions about, are we closing the plant? Are we laying people off? If they've already got their governance and started, and they know that they need to meet and decide things together, those businesses did well. And then there were others that realized that their family governance was not as far along as it probably needed to be. And so then somebody would make a decision and do something, and then some of the other family member owners would say, hey, wait, why did you do that? Why didn't we do this? We should have discussed this. So that was one of the other things that I think families have started to learn because of the pandemic, is that they really need to have some mechanisms by which they come together to make important decisions together.
Yeah, and Canadian family firms, they're bouncing back?
Oh, well, they're like Russ said before, it's not completely everywhere, and depending what industry you're in, some have done gangbusters and others are just still hanging on, depending on what businesses they're in. But I like to think we're closer to the end of this than to the beginning, fingers crossed, and that we're all going to get out of it, and that the family businesses will do at least as well as the average business.
Yeah, fantastic. Mari, resilience, what does that really mean to you? What have you seen in the last 18 months?
Echoing what Steve said there, I've seen quite a lot of ownership moments. Ken McCracken and I did a podcast on this, where sort of early on in the first kind of 4 to 6 months of lockdown, that fear factor, particularly driving older generations, semi-retired or fully retired owners, to think, there goes my livelihood. There goes the acknowledgement of all my years of hard work. I need to get my elbows out, get back into this business and make it, play my part in its survival. So I saw a lot of non-family members being ousted, actually. I saw ownership purchases defaulting. I saw leaders succeeding more quickly than they expected, because actually mum and dad couldn't come into the business because they were isolating at home. Mm-hmm. It was quite, there was positive and negative kind of all happening at once, but kind of going to heap them together under ownership moments. I don't think anything surprised me, and there was a lot happening. I guess the resilience point is around adaptivity. So whether people were hibernating, they were a key, business like in the food business, or they were pivoting, if they've taken time to adapt, then they will survive, is I think what I'm now seeing the results of. And that business bootcamp quote I used earlier, I've heard a lot of other businesses talk about that. And if they have applied what they've learned and brought in new governance, thought of new strategies, or just simply got together like these Indian family business and spent time talking, then actually that has allowed them to do things in a different way and a successful way. I would say there's been a lot of anxiety. There's been a huge amount of anxiety in people, in families, in business for 2 years now, and we're seeing a lot of burnout in leaders. I think everyone's nodding. I think sometimes anxiety, as Bowen systems theory would say, that people striving for togetherness to sort of take the anxiety levels down, often that creates an inability to see creative solution making, because you just want to feel included and be together. But so much anxiety is being countered now with lots more taking seriously mental health, well-being. There's a lot more conversation, there's a lot more action. I'm delighted to see that. There's discussions in the papers in the UK this week about a 4-day week. All of this stuff is brilliant, because there's a lot of burnt out leaders there, and to continue to be resilient after 2 years of this, yeah, they need help. And, that's one of our jobs too.
Yeah, so coming into a question that's coming from the panel, actually, so you're looking at maybe a management team of family members that maybe need some input from maybe someone outside and someone on the board. So how do you broach the subject with a family if they need to bring in a non-family member to the board? How does that conversation start? I mean, I'm opening it up to anyone really. It's just coming from the floor, but family are quite tight, and as you've just all been saying, it's quite become more tight-knit over the pandemic to make sure they make the right decisions. They've then got to open that up to someone that's not family. How do you broach that as a conversation? Josh, can I come to you?
Sure. Yeah, and I'm not a big believer in best practices, because I think whenever, almost without exception, if you find one way of working in one family I could point you to an example of a family that's done something exactly the opposite and is just as successful. But that said, I think this of having independent directors on a board is about as close as we get to a best practice. And when done well, they just contribute so much. Everything from changing the dynamic of the boardroom to be taking off some of the edges of the familial dynamic and making it into more of a kind of at work dynamic, to bringing different skill sets, to helping to navigate some of the most challenging family business topics, like who gets to be the next leader, who's compensated, how are promotions handled. Independent directors are really critical. And so part of the barrier is sort of, how do you broach the conversation? It's getting on the table some of the reasons why people are opposed to doing that, despite a pretty strong case for why. And usually that has something to do with, well, we had some experience, we tried this, it didn't work. Usually though, it wasn't independent members, they were like friends of the family or your attorney, someone that isn't really an independent, so they weren't really able to do that job. People worry about losing control, and it's partly that's a reminder that independent members can be exited just as easily as they can be brought on. And more to the point, you're not going to find independent directors for the most part that are looking to kick you out or to take over. They're going to really be listening to you to say, how do you define success? Let us help you to achieve that. And really, ultimately, this is about sort of having a process, not having to, you don't have to start out by having this fully functional, board of directors. It feels very bureaucratic. You could start out by having a group of advisors and meet once a quarter and just have an informal conversation. Then you see that goes well, you kind of build on that, success over time towards something that's more formal. So I think it's really just a question of getting into the conversation, of understanding the resistance to it, and then building up a process that helps you kind of build from some foundation towards something that gets you towards the real benefits that a board with independent directors can bring to it.
Okay, good advice there, Josh. Thanks for that. Another topic that we talk about a lot in panels like this is culture, the culture of family firms and what defines them and the culture that makes them who they are. How important, Julie, I'm going to come to you, how important is that culture within the family business to help them perpetuate success for the longer term? And how do family firms go about creating the right culture? Is it something that can be created, or does it just exist? What are your thoughts on culture?
Okay. So if we go on culture, we may dive a little bit on the emotional side of the family, and if we're talking about success, long-term success, let's just also look at what do have all these families in common when they manage to pass generation after generation. And the academics have proven that the only thing they have in common is they manage to develop an entrepreneurial orientation at each generation. So now the question is how you do that. So we know that in the conscious parts, you need to have entrepreneurial activities. So you need to involve your team, your colleagues, your families into, looking at the market opportunities. But there are what we called emotional ownership factors. And these emotional ownership factors are basically the reason why the family members or the family owners will join the family business or not. Mm-hmm. And there are three of them. You have the duty to the family. So they go to the family business because of the duty they have. The desire to leadership. And then you have also what they called an affective identity factor. And this part is very interesting because it's linked to a collective unconscious side of the business, which is linked to what is at stake for the generation. And if I look at my parents, my grandparents, what was at stake for them, it was the peace after the two world war you had in our country. So it was about peace. And if you see how we have managed the COVID situation in most of these countries, it was about control, it was about security, maybe sometimes a little bit too much, sorry. But if you look at the next generation, what's at stake for them is the planet. Okay, so now if I come back on your culture, the question is, of course, we all know that the culture already exists. You do have an entrepreneurial orientation culture in your family, or you don't. It's processed, it's structured or not, but there is a culture. Now the question is, how are you going to be able to pass the third or the fourth generation? And you started with that at the beginning of the group, and my view on that is, if the third generation fails, it's because the first and the second didn't prepare them correctly. So they didn't structure, build a culture to develop their entrepreneurial orientation. And the only way to do it is to be able to give the opportunity of the next generation to be released from these emotional factors that are linked to the generation before. They need to be able to be free in a way. And I often look at that, explaining that you have an old king. Look at that in terms of unconscious way of looking at the family. So you have an old king that represents the culture of the family, the reputation, the name, everything he has built. And then you have, a young princess that is in this castle, and she cannot go out because the old king is afraid that she goes out and she's going to be killed by I don't know which guy outside. And there is this chain between them, and you have to free this chain. And to free this chain, both the old king and the young ladies, so meaning the next generation, need to understand that there are no chain. And so because there are no chain, they need to build their culture based on those invisible chain they are building unconsciously year after year, generation after generation, to free each generation and to be able to develop this entrepreneurial orientation.
Yeah, it's a really good analogy in terms of just giving a context to actually the conversation. And you're right, the next gen need to stand on their own 2 feet, but they need to be guided and helped and shaped and developed and educated along the way to then have that confidence, don't they? Murray, what's your take on culture?
I'm so blown away by what Julian said. I don't think I can add anything, but what I'm really interested in is passing the baton over to Sonu, because we're all developed cultures, and India in a developed world, and I really want to hear, if that's okay, what she's got to say about what's happening in India.
Sonu, culture in India, over to you.
The culture. Yes, so the culture in India is very different from the culture in your different countries. And culture plays a very important part in the perpetuation of the business, in the way that the business is run. So let me just give you an example. So it is in our culture that the children are not going to contradict their father to his face, and certainly not in front of others. And then we have this problem where the inheritor has come into the business, and there is a meeting, with a business meeting, and the father says something, and the son wants to put forth his point of view, which is contradicting what the father has said. It becomes a tense situation. So for people to understand the culture and the way to navigate their way into culture and still make it work, that is that how do I put it, that tight rope that they need to walk, family members as well as the employees, because at various parts of the Indian culture, I guess, are different from the cultures of the countries where you are from. And it is for the employees as well as the younger family members to try and navigate their way through where it is not culturally inappropriate.
So can you give me a example? How would you, as an advisor, how would you be able to do that in terms of that navigational piece?
So it's a process of negotiation. It's a process of negotiating over time. It is also sometimes a process of a back channel, and I'm talking now of family members negotiating with each other, say a father and a son, getting the women of the family involved, the mother, who plays a role in a back channel, because the mother is not really involved in the business, the day-to-day running of the business, but is a great influencer. So this is actually a process of negotiation and a little bit of patience and persistence, making sure that voices are not raised in front of the father, making sure that there is a little bit of deference that is required in all negotiations. But you know what? We've all grown up like this, so we do it, I think, almost unconsciously.
It's almost the unconscious norm for you, isn't it, in terms of what you're saying?
Sorry?
It's almost the unconscious norm for you in the way that the families operate.
So, visitors from overseas may find it difficult when they are in a business negotiation where the father and the son are present. They may find it a little, they may find it interesting. But if there are many Indians sitting in a business meeting, it comes naturally.
That's good to hear. And Nikki, let me come to you in terms of culture, because you obviously run the African Family Firm, so you've got a very strong link into African family business community, but you've moved to the States, so you're seeing a different type of culture, I guess, where you're working in the States. So where do you sit on the culture conversation?
I think this culture conversation is at the heart of everything we do. And I think it's really key that family businesses are able to develop strong cultures that are attractive to talent, because that's really what family businesses hinge upon: talent on the side of talent in the business and talent in the family. But often where I've seen this gone wrong is where, because a lot of the families that I work with in the African context are navigating G1 to G2. So moving from the head and the heart of the business being in the founder and trying to extrapolate that from him or her into more people, right? And we have to moving from individual rulership to collective leadership. So how do we create a culture within the family where we have explicit definition of who we are, what we stand for, where we're headed, because unless we're able to do that, we'll fail to engage the next generation, who are key in terms of ensuring that we're able to right-size our business, right-size our investments, right-size our thinking towards philanthropy to what the world needs right now. And equally on the sides of the business, how are we able to attract key talent? What I often see is businesses that are at the heart of them, very founder-centric, where the founder, without him or her, nothing moves, are surrounded by helpers and not co-builders. So we have to move into a dispensation where we have really co-creators and not just coexisters, both on the side of the family and of the business. So I really think this talk on cultures, for me, goes beyond what are our cultural norms in the US versus in Africa, but really what are the values that we stand for as a family and as a business, and how are we ensuring that we're able to attract key people and talented people, both on the side of the family and on the side of the business.
Yeah.
Paul, if I can just quickly come in, just add a couple of more points. And I agree with what Nike said. The culture is at the heart of every family business, and at least in anecdotally, I don't have empirical data, but wherever families have strayed away from their culture during the transition from first generation or one generation to the other, the casualty has been the business, and therefore, a successful family business, if you look at it, has preserved its culture, the family culture. And therefore, the culture is really at the heart of the family business. And, since Mary asked about the Indian culture, I think what I can say is that the culture that is evolving in Indian family businesses is traditionally modern. So there is tradition as well as modernity, but the roots are the traditional roots are very, very strong.
some might say that's sitting on the fence only to try and take the traditional and the modern and try and hinge it. But I guess what we're hearing is it's complex. There's no one size fits all.
Yeah.
I want to move the conversation on now. We're coming close to time, but succession planning is often cited as one of the biggest challenges facing family firms. So, Russ, is it really that big a deal?
I don't want to be accused of sitting on the fence on the answer here, but I think it is a big issue. I mean, it's something that is going to happen at some point, assuming that the business is successful and stands the test of time. But also, given what we've seen over the last couple of years with the pandemic, family businesses can be forgiven for not having too much of an eye straight away in those sort of first few months of not looking necessarily at their succession planning. So they appreciating that it is a big issue, but there's also a business to run. For me, helps to highlight that the succession process is exactly that. It's a process. It's not something that you have on the agenda for your April meeting and then it's done. It's something that if you look at it through the lens of continuity planning rather than succession planning, and the ambition of the family is for that business to continue for multiple generations. One of the risks to that is not having an effective succession plan in place. On top of that, I think breaking down the different elements of succession and separating those out. So if it's ownership succession and the time frame for that is much longer, perhaps the pace of conversation can be longer as well. If it's a management or leadership position and there's more urgency around that, then that can be part of sort of more shorter term discussions. One of the exercises that I use with the clients I work with is I term it the Lifeboat Drill, which is where we go, well, if something bad were to happen now, what are the implications? And are the consequences of that what you intend to happen? If no, the good news is we've got time to address that and put plans in place to alleviate that. Yeah. There's a saying I like when it comes to succession planners, it can either be done with a cold hand or a warm heart. And I think in terms of the emphasis of having a plan, a conversation and structure around it, means because we know it is going to happen at some point, having a plan for it is generally better than not.
Josh, what would you add to that?
Well, I agree with Russ that when we talk about succession planning, we tend to narrow this down to who's the next CEO. And there's a whole range of issues that need to be part of this broader process. But let me kind of hone in on that issue. I think in some ways, the greatest strength of the family business is the greatest weakness. The greatest strength is that you tend to have much longer leadership tenures compared to public companies, which are under 5 years. Family business leaders tend to be in place for more like 15 to 20. And that creates a huge amount of stability for an organization. On the flip side, when that person changes, that could be an incredible disruption to the business. And not only that, but who is selected has not just business implications, but family implications. Like if someone is not selected to be the CEO, does that mean that they're no longer valued? They're not part of the family anymore. They want to leave. So these are very important processes, and family businesses can fall apart if they don't handle them well. And like anything else in a family business, how you do things is probably more important than what you do. The process becomes incredibly important. Setting up a good succession process where you are having the next generation be engaged and part of it, ideally working in collaboration. The worst thing you can do, in my experience, is turn it into a horse race. We tend to think about that as like the GE model, where we've got these several executives and they're competing and so on. Well, you look at what happened at GE, all the ones that didn't get chosen, they all left, right? So we need to have a different approach to thinking about succession. And there's lots of good practices that people have developed over the years. And I think it's something that's worth learning from before you dive into it. It's easy to make mistakes that can have long-term consequences. Paul, I think you're muted.
Yeah, sorry, Josh, thanks.
No worries.
Does anyone else have anything they'd like to add on succession?
Yeah, so if I can talk about succession and the problem of succession in family businesses in India. Actually, the patriarchs are facing a very different problem, which is that of unwilling inheritors. You know, till about 30 years ago, 40 years ago, the problem used to be, you know, who's going to inherit the business, and the inheritors would fight among themselves to say that, you know, each one wanted to head the business. Today, the patriarch actually has a difficult task to attract the inheritor to come and be part of the business, because and there are you know, a couple of reasons for this, because a lot of the successful family businesses in India today are in manufacturing, and the next generation have had access to world education. Their worldview is very different, and when they come back and they see their fathers unwilling to give up control over their businesses, these young people actually do not want to work in a constrictive environment where somebody is looking over their shoulders all the time, where their ideas are not taken into account. Plus, there are just so many opportunities to start your own new ventures, to go and work for somebody else, which weren't available in India to Indians even 30-40 years ago. So the patriarchs today actually have to almost go down on their knees and beg their children, at least one of them, please come, because every family business owner wants his child to be part of the business. And therefore you see a lot of daughters coming into the business, because the brothers decided that he doesn't want to do you know, whatever, dad's business, and the patriarchs have no choice but to, you know, invite the daughter to be part of the business, which is good, because, you know, you're getting more women into the family business. But it's a very peculiar challenge for the business owners, at least in India.
I guess the bigger challenge, though, Sona, is that actually it's having the right people in the business with the right skills to actually run the business, not just the one that wants to step up and do it because nobody else wants to. So there's a bigger conversational piece there. We're running out of time, so I've got two short questions. I'm going to ask you all the same question, or both questions. I'm going to start with you, Julian, but what do you see as the biggest risk? And I need quite quick answers here, but what do you see as the biggest risk threatening family businesses generally at the moment that should be top of their agenda?
Is to, for me, is to manage to integrate the sustainability inside their family business strategy. Because, I mean, all the business models are changing extremely fast today. All the innovation are already there. I mean, Web3 is on the topic today also everywhere, but most of my clients are unskilled on this topic. And so they may take wrong decision, fighting, you know, just stay alive, and not working on long-term decision, training, preparing, succession, everything we talked about today. But it's linked to sustainability, definitely.
Yeah, Nikki, can I come to you?
Yes, engaging the next generation. So really fostering this intergenerational collaboration. And rather, I see a lot of next generation members just feeling like there's no space for them to contribute in the family enterprise. And so go off and set up their own businesses or go off into corporate or other arena, but there's a lot of scope for greater collaboration.
Yeah, and I guess bringing the skills back into the family firm as well. So,
indeed.
Yeah, Josh, can I come to you?
I think the biggest risk is something that we started to hit on, which is exclusion. Family businesses are built on exclusion, on excluding people from the ownership group, from excluding people from different kinds of roles. But at the same time, when that goes too far, I think it's a threat to the viability of the business. There's no bigger mistake than excluding, you know, people because of gender, or, you know, there's lots of good research. The family businesses in general manage their companies quite well, except if they place the eldest son always by default into that position. Yeah. So I think that the biggest thing that family businesses need to be thoughtful about is how do we create that the talent that we have. How do we bring that into the family? Doesn't mean everyone needs to be working in the company. how do we bring that into the family business for it to be successful for the long term?
Yeah, good advice. Murray, can I come to you?
I think the risk is not balancing the success of the business and adapting for the success of the business with the harmony of the family. In other words, what COVID has taught us is that we really need to be adaptive to survive, but actually that shouldn't come at the expense of ignoring the previously undiscussable points within the family, because if that stuff is left to rot, there will be no business. So give both equal energy and support.
Yeah, sound advice from you there too, Murray. Russ, can I come to you?
Yeah, just building on what Josh and Murray were saying there, I think for me it boils down to the management of expectations. And for that to be understood, that effective communication needs to be in place to allow, for example, the next generation to say, actually, I don't want to come into the business. It's not what I want. Does that preclude me from ownership, or does ownership in the business act as an enabler for me to follow my own passions? And is the purpose of the business in that case to be able to support the family outside of working within it? But if those discussions aren't had around the management of expectations, it can fester under the surface and create tension and future conflict.
Yeah, totally agree with you. Sonu?
So in addition to all the points that have been talked about, there's one point that I'd like to make about this, which is the refusal of the patriarch, or the refusal of the family to see the difference between ownership and management. And if they equate the two as equal, that ownership is equal to management, and then complement it with the problem of unwilling inheritors, it is a recipe for the business to just go nowhere. So businesses are going to be successful if the patriarch is able to see the difference between the ownership and management, and bring in the best management, even if they're not owners.
Yeah. Steve, lastly from you.
Yeah, the biggest risk, I think, for family businesses is waiting too long to begin to have the discussions with the entire family, with the rising generation. You have to start talking about governance. You have to start having family meetings. You have to start doing these things. You don't have to hurry up and finish them. You don't have to have perfectly formed, wonderful constitution for your family, but you need to start having the discussions, and then you can afford to take your time and do it right.
Yeah, sound advice there too. So I'm coming to the last question now, but just before I do, I want some concluding thoughts. And I want to end on a high point, really, in terms of today's all about celebrating the inaugural International Family Business Day, and the role that family firms have in terms of income generation, employment, wealth, and the sense of place and purpose, and the force for good that they are. So I want to ask you all just very quickly, and in conclusion, what do you think makes family firms worth celebration? So why do we celebrate family firms? Julian? Sorry.
Yeah, because of the love. I mean, it's when you work with these people, and the first thing you see is the love they share between them, and even if they're in conflict, even they're a complicated business, whatever they have. What's great is when they get together and then they share family, they share values, they share history, they share moments. It's emotion. And that's the reason why I work with these guys.
And without being stereotypical, a very French answer, the fact that you're sharing the love, it gets to the point of the whole day, really.
Sorry for my English, of course.
No, absolutely fantastic. Nikki, can I come to you?
For me, it's the local community involvement. A lot of non-family firms will pursue the global opportunities, expanding globally, seeking global investment opportunities at the expense of forgetting community. But family firms tend to always invest in their local communities and support their local communities.
Yeah, we say that all the time. Josh, can I come to you?
Yeah, just quickly, I think that they have the ability to do business better. I mean, all the things that we're talking about that we need businesses to be, good employers and corporate citizens and thinking sustainably, these are all things family businesses have the potential to be great at. Doesn't mean it's an inevitability or that every business is good at it, but there's something quite extraordinary in this mode of ownership, and it's worth celebrating these stories, and not just the ones that happen to make it into the Financial Times, the Wall Street Journal, about the family fighting each other. So
yeah, fantastic. Mari.
I'm going to have to go with what Julian said as well, actually. I saw this at the weekend. I don't know if you can see it. It's a poster from the Tate. It says, "Everything else has failed. Don't you think it's time for love?" I think it's that. That's what I think they contribute. And because of that, it's the legacy piece. It's what they do for employment. It's what they do for wealth creation, for community, for their employees, for their family members. And coming from that place where deep hearts, deep pockets and warm hearts are what makes up success. Yeah.
Yeah, fantastic. Russ?
Yeah, building on that, really, in terms of not just the economic contribution that family firms make, which is hugely significant, but the impact that they have on local communities, on their workforces, the number of non-family employees I speak to who go, "We really feel part of the family here," is testament to the cultures and values that family firms can demonstrate when done well. And I think that's a really important thing to celebrate, especially given what we're facing at the moment as we emerge, hopefully, from the last 2 years of bleakness.
Yeah, I'd agree with you. Sonu?
Sorry. Yeah. So I personally believe that the family businesses are the unsung heroes, and that we do not celebrate them enough as much as they deserve. One of the reasons is because most of the family businesses, 80% of them, at least in India, are small businesses or small businesses. And we do end up celebrating the large ones, but these small ones, we kind of think of them as petty businessmen or, mom and pop shops. But the work that I do for the magazine and through my writings, I do know that each one of them has such an inspirational story that these people actually battle against all odds to do the work that they're doing, and they need to be celebrated much, much more. And therefore, Paul, what you're doing is fantastic, and they just need to be we need to celebrate family businesses, especially the smaller ones.
Yeah, that's good advice. And to be fair, as an organisation, we're sector and size agnostic. We'll tell the story of anyone that's doing anything of any significance. So if you've got some Indian family firms that want some PR, send them our way. Steve?
Well,
everyone, I should say, sorry.
But everyone said all the good stuff about the love. And even I was saving, I thought nobody was going to say legacy, but then Mary said legacy as well. And there's just so many cool stories. The local angle in their communities, the love from one generation to the next of the family. There's just so much. It's so rich in its complexity, and it's an emotional, there's so much there. It is so chock full of good stories, and good stories that we should keep sharing and celebrating all around the world.
Yeah, fantastic, Steve. That's great. I mean,
and let's celebrate Paul as well. Thank you for bringing this panel together.
Yes,
thank you.
Thanks, Mari. That's very kind of you. I'd like to just say, just throw it back at you guys. I know it takes time and effort for you to give up your time. The work that you do is incredible, and I love talking to you about what you do and actually seeing or hearing firsthand the things that are going on out in the world at different corners. And yeah, COVID's been horrendous for many family businesses, but one thing it has done is brought the global community closer together, without which we wouldn't be able to necessarily do this together. So thank you so much for your time today. Look forward to catching up with you soon. In the meantime, let's continue to share those stories and celebrate the success that is family business. Have a great afternoon. Thanks, guys.
Bye.
Thank you.